This is Jeff Kohler, the Option Addict, from OptionAddict.net. And I'm here returning from a nice, relaxing weekend and ready to get down and dirty on another watch list. And what you'll see in front of you right now is a chart of the good old S&P 500 index. And the reason I'm starting here is to give you kind of a target price of where to expect the market to go later this week. Right down to about 1375. That's my bullseye this week. I'm thinking we might actually approach that level. If you look at the Dow Jones, you can see, pretty far away from those same February lows. But seeing that the major indices have broken some significant support levels and that they've held, doesn't make me all comfy and cozy that we're going to see a lot of bullish upside here this week. Plus, using January as a barometer here, you can see we're going to have a pretty weak couple months here for stocks. So as the major indices have broken these strong support levels, look for the next level of support, which is going to be the lows from back in February and March. What you also need to be aware of this week is it's going to be a crazy week for economic reports. We've got retail sales, PPI, CPI, Fed Beige Book, housing starts, building permits, and crude inventories. So as luck would have it, it's likely prices are going to be all over the map. So make sure you're planning your week accordingly. We could see an awful lot of volatility, but my prediction is that we continue in pursuit of new lows. Not trying to sound overly pessimistic here, just is what it is. I'm going to start off with a couple price patterns that I'm watching this week, and the predominant pattern that I'm seeing across all stock charts is the bear flag formation. I'm going to start with Monster, ticker symbol MNST, and I'm going to actually view these on a 6-month chart so we can see this pretty closely here. But if I highlight this action here, this is a bear flag, downward trending stock. Got a nice little break to the downside from support, taking us down to 27, then a nice rally upward. Just looks like an upside down flag, which is exactly what a bear flag should look like. You can see the same thing coming out of casino stocks and in particular Wynn Resorts. Looking at the 6-month chart here, you see the same thing. A nice little drift downward from about $115 down to about $100 per share. Nice little flag to the upside, taking us up back to about 110, and we're breaking that level as of Friday, so watch this to head lower as of Monday. Another bear flag, one of my favorite restaurants on planet Earth, Jack in the Box. And while you're seeing Jack in the Box in a nice steady downward trend, we've also got a bear flag that we broke out of as of Friday as well. I'm also going to pull up Nile, symbol N-I-L-E, and if you look at the chart here, same thing. Testing that neckline of kind of a long-term head and shoulders formation here, back up at 75. We started screaming downward, and we flagged slightly higher and broke out of that flag as of Friday also. So a lot of these here are already having broken out. Philip Van Heusen, PVH, is another. Nice little area of support that gave way last week, and you can see it flagged upward nicely and is also starting to break down as well. A couple other patterns that I'm going to look at. Next is ASR, not the most volatile stock on the list this week, but you can see a nice little ascending triangle here. You might want to even catch this on a longer term chart to see just how good this looks. Also, I'm watching CX, which is a repeat from a while ago. I don't really see much of a decisive break in this one yet, so I still have this one on the list. Now, a nice bull flag formation that still hasn't broken out yet, but I'm watching is ticker symbol LNN, and machinery not performing as well as I thought it would. While Lindsay here and Deere looking good, some of the other stocks not responding so positively. Another repeat stock is EDU, which is New Oriental Educational and Technical. You can look at the stock here, symmetrical triangle, that really hasn't broken out. Now, in that same group, you saw Apollo had a 10% move to the upside last week, but CECO, a 10% move to the downside, and we really saw no volatility here in this stock. So I'm watching this one. We should see a breakout sooner than later. Now, something new that I'm going to try this week is ETFs that I'm going to get long and short. And the ETFs that I'm watching to get long this week are going to be IYH, which is the healthcare ETF. Look at this from a 1-year chart. You can see it's trading up near its highs. If you're going to get defensive, you ought to look at the IYH. And IGE, not really a liquid investment here, but I like natural resources here. Most specifically, natural gas. Now, the ETFs I'd look to get short this week are the XLF, which if you look at this, nice little downward trend. Broke support not too long ago, rallied right back up to that level, getting ripe to short. And same thing with real estate. I've been bearish on these two groups for as long as I can remember. But watch this retracement right back up to prior lows. Once it gets there, it's going to be a great opportunity to get short. Now, as far as other stocks that I'm going to get long or short this week, the support bounces, the resistance bounces. Get ready. I'm just going to have a chart fly in here right about now.
Excuse me while I whip this out.
And last but not least, I'm going to be looking at stocks that I'm looking to see some significant breakouts. Most notably, this will be kind of the 5-star stock to watch this week, is Interactive Brokers, ticker symbol IBKR. And the reason why is if you look at this stock chart here, it's approaching its IPO price. And this is pretty significant because the stock, ever since it was initially issued, has not traded above these levels. And once it does, I think we're going to see the stock rally quite a bit. You know, I've been bullish on online brokers for a very, very long time, but IBKR are going to be one to watch as we head into this week's worth trading. Also, OMG. I got a nice little rally out of this as it broke through this little ascending triangle here at 60, but we're also breaking through a significant resistance level here at about 63, 62, right in that area. So it wasn't able to do that earlier this week, but I'm watching it going forward into next week. Also, I'm going to be watching VMI, stock we've traded several times via the watch lists. It's getting up to that $100 mark. It's getting up to its 52-week high. It's also getting ready to break out, so make sure you know about it. CVH out of the healthcare sector. If you're looking to get long this stock, check this out on a 5-year chart. They don't look too much better than that. We're getting near significant resistance levels here, and once it breaks out, this will be a pretty good stock to own during the tough times. Couple others to look at, MCK McKesson. Looking at the 1-year chart here, you can see it's breaking through its resistance level. Not the most volatile stock, but definitely one you might want to keep an eye on. And last but not least, HOLX. Like this stock, like the formation here, like it to break out next week. Stocks I'm watching to break down would include Legg Mason, which is one of the few financials that still has a pretty good floor or foundation built. Look for that to crack here sooner than later. BHI. Also got some good support here in the 75 to 77 range. I'm going to keep an eye on that to see when that wants to break down. And last but not least, Nordstrom, JWN. It's got a firm foundation here. I'm looking for it to crack. Now, my theme for trading last week, I made mention of this earlier in the week, but I told you to watch stocks that had built solid support levels like you see here with Nordstrom. And when the market started to trade lower, wanted to get short all these stocks that were breaking down. And this would include such examples like ROP, for example, one of the most notable. And if you recall, we talked about getting short this stock right at about 60, and look, it's done nothing but drop all the way down to 50. So a $10 drop into $60 stock, we like the moves like that. However, I'm going to switch this week's theme just a tad. What we're going to be looking for is the stocks that did break out. We're going to be looking for the retracements. So the stocks that broke support, looking for them to rally back up to old support as new resistance, or the stocks that broke out to the upside, looking for them to retrace back to old resistance as new support. So this week, I think there's going to be a lot of opportunities for support resistance bounces in some of the stocks that we've been watching over the last few weeks. So make sure you haven't thrown those old watch lists away because they are still as good as they were in the initial weeks that I issued them. There's a lot of good trades in there. So make sure you go back and review some of those stocks. You'll find a lot of stuff to trade there. Anyway, that's about enough for me. I'm ready to call it quits. So this is the Option Addict signing off on another phenomenal watch list. So thanks for watching.
Bueller. 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 Bueller.